Hello, everyone, and welcome to a special edition of Kevin's Corner. I'm your host, Kevin Horner of Galligan and Manning. As I've been teasing in the last couple of Kevin's Corners, we're going to do a special series. We're going to do our special speaker series, which we're kicking off today. We're kicking off today with Dave Trafican, who is a financial professional I've worked with for many years, at least 10 plus years, done a lot of wonderful things for our clients. And today he is going to talk to us about some ideas with life insurance and how he can utilize those in a really good, complete estate plan. So I'll give him a chance to introduce himself in just 1 second. I will like to start, though, as I have in the past, but it bears repeating here, is that this is all just for education. This isn't legal, insurance, or financial advice. Anything we say is just our personal opinions, not that of any of our parent organizations. So with that, Dave, if you'd like to tell us a little bit about yourself, then we can jump right into it.
Hey, Kevin. First of all, thanks for having me. I really appreciate you reaching out to me and us being able to collaborate together, even though you're over in Texas now. So, my name is David Trafican. I've been in the insurance business for over 10 years now. Started out, focusing on basic things, and obviously, as my intelligence and comprehension has evolved, I've focused on more complex topics. So that's, I guess that's a little bit about what we'll be talking about today.
Good. So like I said, I was thinking that we could just kind of look at this because for all of our clients, and when I do the Kevin's Corners, it usually revolves around estate administration or estate planning. I thought the life insurance is one that always comes up. So if we could maybe you could just share a couple of really good benefits of where life insurance could work with a good, complete estate plan would be a great thing for the listeners.
Absolutely. So when you're thinking about life insurance, I think that the average person out there thinks of being able to bury themselves, and not that that's a concept that's irrelevant or inaccurate or untrue, but things have evolved, especially when you take a look at our current tax program, the Tax Cuts and Job Act, how that's affected things. Life insurance has become a fantastic way for people to leave inheritance to their loved ones, and also life insurance has come a little bit of a Swiss Army knife, if you will, and being able to accomplish more than one thing with the same dollar bill, if you would.
Yeah, no, I agree with that. I think especially for the Pennsylvania listeners out there, life insurance is one of those things I always like to see in an estate plan because Pennsylvania has inheritance tax. And one of the nice things about life insurance is it's exempt from inheritance tax. So people don't think about the net post-tax dollar always about what they're leaving to people. But life insurance was always a really good vehicle to do that. Nice, easy, quick, liquid, which is always very beneficial and tax beneficial. So it was always a good thing for clients.
Absolutely.
So then I guess in addition to that is, a lot of times what comes up for clients on the other end of the spectrum with things more like Medicaid planning or elder law is when they're starting to think about something that maybe isn't really life insurance directly, but it kind of relates to it. It's where they start to think about long-term care insurance or how to provide for long-term care. My understanding for different people is that there are some life insurance options that can help assist with that. If there's anything like that could be beneficial for people.
Absolutely. So a lot of times when people think of life insurance, they think about the death benefit. That's a pretty simple concept. I pay into a program, either lump sum or over a period of time. At the end of it, upon my passing, there's a check waiting for my family, which you alluded to earlier. What people don't know about, though, is that there are different types of life insurances out there that offer living benefits as well. Specifically, what life insurance companies have done is if they've recognized that the long-term care insurance that a lot of people would buy is expensive, sometimes it's not utilized, and it's strictly underwritten. What they've done is they said, hey, that marketplace is being underserved. Maybe we can lump that in with our life insurance offering. So what a lot of insurance companies are offering now is not only the death benefit, but they also offer the ability to access your policy, provided you're not able to do some of the 2 out of the 6 activities of daily living.
Sure. And I have to say, I've had a lot of clients who have enjoyed doing it that way because, of course, no one quite knows if you're going to need long-term care services or how long that will be necessary. Not to be too blunt, but we all know that sooner or later life insurance is going to be used if you keep it. So one of the nice things for people who maybe aren't sure about that risk for long-term care or how they're going to pay for nursing home, in-home care or whatever, or they haven't really given it much thought. A policy like that is nice because they know they need or can benefit from the death benefit aspect. But if it can cover both, all that much better. It just makes what was it you said before? It's the Swiss Army knife.
Yes.
It gives
Yep.
you multiple options, the one tool that can provide multiple options and fixes, which is really, really helpful for clients, I think.
Absolutely. And also, when it comes, as I mentioned before, the underwriting for long-term care contracts is pretty strict. You have to
Yeah.
be fairly healthy, probably an average or an above average healthy individual, depending on when you apply for it. But with there's a concept out there that leverages something that's called a second to die policy or a survivorship contract. And what it does is it actually takes the insurability of two people and it marries it into one.
Mm-hmm.
So you have that person that can't qualify for traditional long-term care insurance. They can't qualify for traditional life insurance. A second to die policy can often help to curb some of that issue. It'll cost you more than if you had two healthy people, but it's almost the best way to try to create sort of window there or windfall there that the insurance company will be able to essentially bring on that person that's uninsurable utilizing that second to die policy.
Sure, that makes sense. Oh, and one thing I thought about before the inheritance tax, and I kind of skipped it, is for people for estate planning, life insurance used to be a really useful tool. This is not Pennsylvania specific, this is just everywhere, for estate tax planning, because either you needed all that liquid cash so that you could pay that, or you use life insurance as a way of passing things outside of your estate. You could use a trust to hold the life insurance. That technique, I think, is becoming more popular. That's sort of a segment unto itself, but long story short, with all the estate tax being as sky high as it is, it's supposed to come down. And unfortunately, thanks to politics and coronavirus, it'll probably come down sooner than later. So those tools that used to be more commonly used with life insurance are definitely coming back into play. And actually, you know what? I meant to say this one too, and just now came back to me. See, you've brought out very good thinking on from me, Dave. That's a good effect to have. But one thing for clients that people tend not to think about very often is actually clients with children with disabilities, for example. It's a situation where economically it's a bit of a stressor because the family is providing funds for their loved one with disabilities, which is just what you'd expect. The one thing that particularly a second to die life insurance policy is really beneficial for is that when you're no longer around to provide the money, you can use something like a second to die policy. So you provide that liquid money for your loved one, probably in a supplemental needs trust, but you do it when very affordably during lifetime. You can set that up, take care of them as you need to, and then you have that nice windfall set up for them afterwards, which is a really great benefit for people, I think.
Absolutely. Couldn't agree more with everything you said there. So absolutely.
Good reason. And this, a lot of people have paid attention to this. I've done multiple Kevin's Corner and some blogs on this in the last, actually over a year at this point, is we had the Secure Act come out. So that's one of the things that when people are looking at their financials, their insurance, their whole overall financial package, let's just say, they're examining how that's going to impact them. What role does life insurance play now that we have the Secure Act out there?
Sure. So when you take a look at the current environment, Secure Act recently passed, Tax Cuts and Job Act passed relatively recently as well. I think it passed in 2017. So what that means is two things. One is the tax rates are the lowest they've ever been. Two is that with the Secure Act, the way that the law is written is that the distributions have to be completed by the 10th year. So in theory, you could say, I'm going to take some in year 1, year 5, and year 10. Obviously, there's reasons to and not to do that. But what they've done is they've taken a lifetime worth of distributions and they condensed them down to happen within a 10-year window. And unfortunately, through experience, what happens is you have people that are in their prime money-making years. They're in their 50s and 60s. Their parents pass away, and they're at the highest tax brackets that they've ever been. And this is a tax burden that goes in addition to that. So what I've been doing with a lot of my clients is saying, hey, maybe we want to take some of those RMDs that you aren't spending or maybe accelerate some of the distributions because the tax rates are lower right now until 2025. Maybe it makes sense for us to fund a life insurance policy for the next 5 years. That way we can have that death benefit payout without any restrictions and any tax liabilities generated from that death benefit. And obviously we can, make it as loose or as liberal as far as or as stringent as we want with the payout. We can use trusts. We can name specific beneficiaries. We have all those luxuries, but the biggest luxury is we don't have to worry about Uncle Sam sitting in our pocketbook. So that's something that's a conversation we've been having pretty frequently with folks at my firm.
Good. No, I'm glad to hear that. It's definitely one of those things. This Cure Act applies to so many people. It's changed the game for so many people. So it's nice to have yet another solution provided by life insurance. So that's good to hear. Okay. Well, I guess with that then, Dave, I'll say thank you very much for your time. Thank you very much for joining us today. I've always enjoyed over the years working with you and all the expertise you bring. So thank you very much for bringing it to this meeting.
Yep. Thank you for having me.